We're encouraged to see stronger economic prospects after years of disappointing global growth. There are still many downside risks, however, and countries that have the fiscal space need to continue with structural reforms. This is vital to accelerating the sustainable and inclusive economic growth needed to end extreme poverty by 2030. We're meeting at a time when we face several overlapping crises, both natural and man-made, all of which add urgency to our mission. Conflict, climate shocks, the worst refugee crisis since World War II, and famine in parts of East Africa and Yemen, which the UN has called the worst in 70 years. In addition to fragility, accelerations in technology are changing the landscape. We estimate that 2/3 of all jobs that currently exist in developing countries will be wiped out by automation. At the same time, the internet, smartphones, and social media allow everyone to see exactly how everyone else lives, which is causing aspirations to rise all over the world. I see this everywhere I go. So in the midst of these crises and with rising aspirations, we must change the way we work in development finance. We have to start by asking whether the private sector can finance a project. If the conditions aren't right, we will work with our partners to de-risk that project or, if needed, de-risk entire countries or sectors. Here's the good news. There's never been a better time to find those win-win solutions. There's trillions of dollars sitting on the sidelines, earning little interest or even negative interest, and investors are looking for better returns. That capital should be mobilized to help us meet the exploding aspirations of people all over the world.